of the Indian economy, and to discuss that, I have with me Indranil Pan, the Chief Economist of Yes Bank, Madhavi Arora, Chief Economist at Emkay Global, and Siddharth Sanyal, Chief Economist at Bandhan Bank. Indranil, warm welcome to you. Uh, on expected lines, but that change in stance, perhaps an indication of how the members of the committee see the future growth scenario shaping up, Indranil?
Yeah, obviously, I think, and as the governor also explained, the change in stance was more to clearly signal that rate hikes are off the table at this point in time. Uh, the inflation is aligning to the 4% level, and this is something that has happened suddenly, which therefore opens up space for the Reserve Bank of India to cut rates. I personally had not expected a change in stance, and that was being guided by the previous policy statement, whereby they had indicated that the maintenance of neutral at the February policy was basically to indicate the heightened uncertainty that was there. But yes, the accommodative stance, and nobody was expecting, anyways, an increase in the interest rates. So then, accommodative stance from neutral is appearing to be justified, given the softening bias of inflation and the heightened risks that growth would see out of the tariff developments in the world.
Madhvi, how much of the global context has informed the decision of the MPC this time around? You'll have to unmute yourself, Madhvi.
Yeah, hi. Sorry.
Hi.
I was saying that if you listen to the governor's speech, he was very uh, comfortable on domestic growth traction. In fact, very neutral to positive on the domestic growth traction. But he explicitly referenced the ongoing trade and tariff uncertainty as one of the major downside risks to growth. In fact, RBI's own estimates suggest that every 100 bips fall in global growth would hit the domestic growth by roughly around 30 bips in a normal cycle. And these cycles could actually turn much worse than what we are assuming at this point in time. It's very difficult, but I'm very sure that in the policy discussions, the tariff shock I think dominated all the discussion with regard to their reaction function.
Siddharth, your first comment really, and later on during the show, we'll also try and play out one of the most crucial remarks by the governor, which explains both the change in stance and the tariff impact. But your sense, Indranil said he did not expect the change in stance. What were your own expectations versus what got delivered?
I think the rate cut was absolutely expected. 25 basis point was absolutely expected. No surprise there. The rate stance change was a little bit of a close call. I don't think there is too much of a surprise there. But to me, the most emphatic thing that has come out in this particular policy is the way he has guided on his liquidity view. It's really important to note that he has come out in the press conference and said that wants to keep liquidity in surplus at around 1% of NDTL, which means above 2 lakh crore of banking system liquidity. I think that's very, very significant.
Okay. Indranil, let me come to you and ask you to explain to our viewers the other elements of the MPC decision that seem to have responded to the emerging global and therefore the domestic growth scenario, as well as some specific measures, including, for example, incentives for exporters.
Well, I think the broad understanding is that inflation is aligning lower. And yes, there could be some surprises in terms of the currency, as well as maybe supply shocks that could emerge out of the trade war. But overall, the whole sense is that we are in a situation where global growth is tending to tank lower. There is a 104% tariff now on China, which means that China's determination in terms of sort of pushing global growth higher is also getting muted, which necessarily means that the crude oil prices and the overall commodity space is much weaker than was being anticipated. So those are the positives for inflation, which the RBI is taking into consideration along with the domestic factors of the agriculture sort of being on a positive side. On the growth front, yes, it expects the recovery to happen. But the worry comes from the fact that because of the global sort of happenings and how it unravels, the growth pickup may be less than what otherwise would have been, and therefore it needs policy support. Possibly also to the extent that the fiscal support may not be something which can be front loaded and may be seen if sort of necessary later, more proactive than reactive, which necessarily means once again that the monetary policy has to lead from the front. So that I think is the broad understanding and the sense that the governor wanted to highlight in this monetary policy.
Madhvi, when it comes to the impact of the US tariff hike, from whatever was said, and we'll try and play that comment out before you answer the governor's comments on tariff impact, do you think that all the potential possibilities have been accommodated, or is the RBI treading very, very cautiously at this stage? But before you answer, let's quickly listen into what the governor had to say on that particular point.
India vis-a-vis some of the other countries, you mentioned China and some of the smaller countries, is much less. Our exports overall, about 12% of GDP, less than 1%, I think, for 2%, I think, for America, for USA. You compare it with some other countries, even China. China is about 19%. Germany is 37% exports overall. And even EU, is 30% plus. So our and smaller countries, have in about 80%. I'm not talking about those countries, Vietnam, Taiwan, etc. So to that extent,
Madhvi, over to you now. We played out that portion just to get our viewers to hear what exactly he had to say.
Asia has been hit much more than India on tariffs, and India is of course less export exposed as well versus emerging Asia. But if you look historically, India has never been non-sync with emerging Asia on cyclical downturn. So we may be a little better off here and there, but on cycles, it's impossible for India to actually be on a upward trajectory or even a neutral trajectory when the rest of EM Asia, which is again India's important trade partner, will be seeing a cyclical downturn. Also, I think one has to keep in mind China's survival response to these massive tariff blows, because that will matter a lot for India, especially as China, which is invested massively on industry capacity in the last 4 years or so, would find new markets to dump their industrial excess capacity, which obviously will have negative implication for India on inflation front. So it will be disinflationary for India, but also would impact our industries to some extent. While we are negotiating with America and other trade partners, we'll have to sort of protect ourselves against Chinese response, which could, as I said, hit domestic industries and could also have a disinflationary impulse. Now, while one is talking about Asia versus India in terms of relative tariff hit, certain sectors do enjoy a very small window of relative opportunity in this trade war. But capturing that also would require a very swift policy action. I'm not sure whether we are ready, to really capture that bit. But on a relative basis, sectors like textile, apparel, pharma, footwear could be the least exposed as of now, while auto and jewelry are again much more vulnerable. So obviously, on number front, it is not a very big hit. But again, it's a very dynamic world. It's a very dynamic forecasting period also. I don't think you can see India in a silo phase and think that we are better off than the rest of the world. But and we would not be impacted. I think historically India has synced very well with Asia, emerging Asia specifically, and we will likely see a cyclical downturn with the rest of Asia.
Okay, cyclical downturn with the rest of Asia. Siddharth, the question that I have for you is the RBI underestimating the growth hit? Because we are yet to hear from the government in a major way. The government is pretty calibrated in its response to the tariffs because there is a full-fledged negotiation underway with the United States. But is the RBI underestimating the likely hit?
Well, the tariff war is it's still very early days, and it's still changing every day, if not every hour. So we don't exactly know the current situation. Some of these tariffs may actually get rolled back over the period of the next few months. There might be some more retaliatory tariff from some of the countries, and the risks are very diverse and diverse across both the spectrum. So we just don't know the scenario at this moment. But if it goes for the not so favorable scenario, at this moment, what we are talking about is possibly more about the first round or the direct impact. And in a situation of some kind of global financial turmoil, we have seen earlier the second round impacts can potentially be slightly more harsh than the direct and the first round impact, which we all economists tend to measure in the beginning with our Excel sheets. So that we have to figure out that over the course of the next few weeks and next few months, what is the direction this particular conversation across international borders are taking place? And I think the answer lies there. So very early days, we know very little about it.
Indranil, the point that the governor made that the change in stance from neutral to accommodative means in the absence of shocks, MPC will only consider status quo or rate cuts. What is the point that the governor is trying to drive home?
I think, as I have even sort of alluded to earlier, I think the clear message is that with inflation having come down, remember we had been struggling with inflation for quite some time, and the previous governor had kept rates unchanged at around, say, about a 24-month period. And still we were sort of struggling to get inflation down. Now, with inflation being on the lower side, the room clearly opens up to support growth. And hence, the rate hike story is possibly out of the window simply because one of the major reasons why inflation has come down is because of the vegetable prices and therefore the whole food space. He talks about how cereals production is better, Rabi is doing better, Kharif crops have come in. Pulses has also, as per the second estimate, pulses production in India is better than the last year. And all goes to say that food inflation is not a challenge. Now, in an atmosphere where demand is relatively on the weaker side domestically, it is very difficult to also see that core inflation will be a challenge. And I think in one of the sentences, he did mention that one reason for the uptick in core is because of the higher gold prices, which is something which is beyond the ambit of the monetary policy and hence provides the adequate comfort for us looking only at a cut at this point in time. And when we reach that limit, we don't actually get into a hiking cycle sooner than being anticipated.
All right, Indranil, thanks very much for your time. I know you have to leave, but I want to go to Madhavi. Madhavi, what should we now expect in the rest of the year in terms of rate cuts?
So it's very tricky at this point in time, but definitely, I think there's been a lot of space that's been opened up for rate cuts. So we are expecting now it to get much more deeper. We were not looking at more than 2 rate cuts from here on, but I think now the rate cut cycle will go beyond April and June. And terminal rate would even go to a 5.25% in this cycle overall. Of course, that will be contingent on the extent of the global slowdown or recession, which nobody right now has a handle on, because it could be a very short-lived recession.
And therefore, the duration of the cycle, the duration of the cycle, very hard to call at this stage, right?
Correct. I think there's a lot of uncertainties. Every central bankers in the world is actually, facing that push and pull factor, right? I mean, a central bank like the US, where probably the first leg of impact would be stagflation for them, but they are anyway looking at imminent recession. For them, what is the step that they should take? Should they be more forward-looking and actually start cutting rate, or should they actually respond to a high inflation that could take their core inflation to as high as 4.5-5%? For countries like India, emerging markets in general, again the push and pull factor is very different because they will have to also manage any kind of financial condition that may emerge, especially as the shock to sentiments or capital outflows. That also will require a much higher risk premium for emerging markets. So I think it's a very difficult time for them to really be very forward looking in terms of how deep the cut cycle would go. But there is, as Adrian was also mentioning, there is no denying that the cycle's direction is very clear. It's going to be only easing. Now, how deep, one doesn't know. But I think that if it goes into a recessionary state in the world dynamics, it will be logical for central banks across the world to probably be in sync, and we would see a much deeper rate cut cycle. As of now, I think we are now looking at a nominal rate of 5.25 plus minus 25 pips in this cycle. The cycle could be as long as 1 year.
Okay, as long as 1 year and even 5%. Siddharth, the same question to you. How long and how deep is this easing cycle likely to be?
I think Madhavi articulated it nicely, and my answer would be somewhat similar. So, in the beginning of the cycle, we were expecting a shallow rate cut cycle in this year. That view has changed very clearly. We do think that going ahead, even after today, there are two more rate cuts definitely on the cards, potentially a little more. So if I see this way, that average inflation averages in FY26 somewhere in the zone of 4 to 4.5. Today the RBI spoke about closer to 4% than anything else. I think at a 1% to 1.5% kind of real repo rate is a very comfortable zone for RBI if there is not too much of scare on the growth front and recession front. If there is something more, they can look forward to close that gap a little more. So a 5.5% kind of terminal repo rate looks almost given at this stage. It can be lowered by a few more basis points if the situation warrants so.
Okay.
My answer. And my sense is the way things are going, the bias would be to make it sufficiently front-loaded rather than very staggered.
Viewers, what I want to do with both our economists in the last question on the show is to try and ask them to make sense of the emerging situation. Madhavi, coming to you, the question is that we don't know when and if at all these tariffs are going to be rolled back. Why do I say this? You perhaps know that because some of the key people who are involved in this, and primarily Peter Navarro, seem to be not satisfied with the Vietnam response of 0%. They are saying, no, our idea is to reduce the trade gap. Now, I don't know how that happens in economics terms, but the real impact is we don't know whether these negotiations will succeed. What is the end game? In that kind of situation, what do you expect to happen to global growth?
When you don't know the end of the game, it's very difficult to really ascertain what will happen. All you can say is that there really no winners in these kind of wars, right? Not even relative winners. So these recession will take everybody down, especially if it's led by the US or by their own policies. It's very sad that a rich nation actually wants to become a nation which would want to basically manufacture things like shoes and very basic elementary labor intensive sector-led work. But that's where we are at this point in time. Things are just going, shaping up at this point in time in a very bad fashion. I do not know where it really would settle. Our sense is that sanity will prevail when it starts hitting the economy in a real fashion. As of now, it's all sentiments. When it starts really hitting the economy in a real fashion, you would see some kind of policy backtracking. If that doesn't happen, obviously we are in for a much longer pain. But I think it could be a little long drawn. As I said, there's going to be no real winner in this. If you're expecting that we will be saved from here and there, it's unlikely that India would be saved, because in the end, your trade partners who probably have a much bigger exposure to US are also going to be hit. And unfortunately for India, exports were relatively a decent play. It was actually a big contributor to growth in early part of post-COVID period. And then it became a much more neutral contributor to growth. whereas services has been doing very well, but exports of goods had actually started slowing. But it was still a neutral play in terms of our growth, and domestic dynamics were actually worsening. Now, when domestic economic agents led by private sector are not participating in the growth story, export as a lever for growth globally will, probably see a downturn. So you actually are going to be seeing a massive correction in domestic demand, domestic growth as well. So very difficult to say where it will end, but we are in for a global recession. And as I said, depending on how long drawn these discussions are, and what the policy response of America in terms of fiscal and monetary side would play out, or even for China for that matter, because China's response will be extremely important for us because they are sitting with excess capacity in the global market, and they would have to find a way to survive. And that country doesn't care about margins, right? They just play the volume game. So we could be actually bearing a brunt of it rather than enjoying the so-called relative growth picture. So I think overall it's very messy because you are really playing with the logic of comparative trade advantages and disadvantages, and you are disturbing the global equilibrium. There are going to be dead weight losses in output. So clearly, very difficult to say how bad it could go and how deep the policy responses could be, and how long drawn or how short these recessionary cycles could turn out to be. But as of now, all I can say is that we're in a big mess. Uncertainty is not good for any businesses. Uncertainty is not good
Right.
for consumer consumption, behavioral curve. So this obviously will have a massive impact on private economic agents around the world.
Uh, Siddharth, the last question on the show to you. We have heard from President Trump overnight that pharma tariffs are also coming. That exemption window might just last maybe another week or so. We don't know when it will happen, but he's now said it, if memory serves me right, at least 3 times. So in such a situation, in such a volatile environment, do you yourself, what does your gut tell you? Because I'm sure data is not helping at this stage as to what this end game is likely to be.
This is a really tricky situation on this particular aspect. And if I see from an Indian economist point of view, typically the structure is such: the much discussed domestic demand, big domestic market, the fact it provides you some kind of growth stability, the base for growth, which gives you at some kind of a decent momentum on the growth front. But the delta on the growth front typically comes either from a very strong investment cycle or some kind of an uptick in the net exports part. Now, the investment cycle we have seen, there was a big push on the part of the government for a sufficiently long period of time, but the private investment part remains quite muted for a very long time. And given the kind of uncertainty at this moment, it's not very easy to revive private investment in India. So then, in this kind of a situation, over the course of the next 1 year, a little longer than that, the real positive factor which could have played for India in a relatively benign commodity price situation had export earnings, export momentum been a little stronger. Now, with every passing day, it's becoming a little bigger question mark is coming in front of us on that particular front. So it's far from being a very healthy scenario. And if going back to RBI's policy, today's policy, if I look at the projections, if one has to see that which side some of the risks are stacked up, possibly on the growth front, some more downside risk you cannot really rule out. So overall, it's at the cost of repetition, a very tricky situation, very early days. We don't know most of it as of now. But in the next few weeks or next few months, unless there is a significant de-escalation of the current narrative, there can be some bit of downside risk to the forecasts clearly on the growth front, not only in our case but for a lot of other countries. Also, the last point here, in case of a country which is heavily dependent on goods exports, typically in case of other countries, it takes a bit of time to set up the procedure and infrastructure on production of that particular goods or commodity. But in case of service export, it's a constant process, and people tend to develop some kind of competitiveness on the service export, which is the strong area for India. So we need to be especially watchful on that particular aspect as well.
Well, viewers, who would have imagined that you would see jokes being made about people living in America, Americans in America, uh, looking at their next iPhone purchase and calling a relative in India and saying, "Jara ek iPhone साथ में लेके आना." You know, that's just one amongst the million memes that this has generated. Another one that shows hapless ordinary Americans sitting and suing their shoes. That is the extent of the unraveling of the global trade order, and 40, 50 years of a trade order started with perhaps when some of us were not born, and now we are seeing it unravel in a manner that no one had imagined. And what are therefore going to be the consequences? How will companies respond? What will be the impact on economies all across the world is that big question mark. And that is why what India does, especially its monetary policy, is extremely significant in holding up growth in India and protecting our economy. Madhavi, Siddharth, thank you very much for your time with us today, viewers. With that, it's a wrap on this episode of Easynomics. We'll be back with more. Until then, goodbye.